I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, portfolio manager and consultant at Feneck Consulting. Thank you so much for being here. Always great to have you.
Great to be here. Thanks, Charlotte.
Of course, we've got so much to get into today with the precious metals, critical minerals. But before we do, I know you've got an event coming up in September, which is quite soon. Do you mind sharing the details for investors?
Sure. So I've been in the conference business 3 years now. This is our sixth U.S. conference. We have a really interesting format in that it's one-on-one meetings with CEOs, which isn't unique to the industry. What is unique is how we screen investors. We don't want investors that have 5, 10 grand to invest, like that are just starting. Like, this is a tough sector. And we can talk about how that has shaped up since March 1st with the war. But if you can't afford to lose money, you can't be in this sector, right? So you have to screen these people pretty hard. We also screen out people that are trying to sell private placements because that's not helpful to our companies, right? Like, if they don't need to raise money, why are they going to meet with someone for 25 minutes to talk about something like that? So we screen on both sides pretty hard, and we come up with a unique kind of format where we're doing a broad commodities conference, where we don't have just gold and silver, Charlotte. We have tungsten, we've got copper at an all-time high represented. We've got energy companies now that they're back in vogue, right? So we're hoping that clients will reach out to us. My email is always in the show notes, and I'm happy to take questions from people about the format. But what's unique about this one is that Don Durrett, my partner, and I live in Arizona, so we're able to draw, to a local conference like this for the first time on the West Coast. So we're excited about it.
Well, thank you for sharing. And as you said, we'll have the details in the video description below for anyone who wants to reach out and learn more. Let's get into what's been happening with gold. I think we had a pretty lackluster July for the metal, but just this past week, we saw the price start to move. So I wonder if you can break down what's behind that movement in gold.
Sure. So the 3,900 level we talked about the last time we got together as being important, and it was holding, and it did hold. That's really good because the chart looks very much intact. We did say there was a small probability of it getting to 35 to 3,600 because the price action was just getting rough, right? I mean, June, July were pretty rough months for gold and silver, and you saw it test that level 3,900 a couple times and hold. But now, we're firmly above that, and we put out a note to everyone at 40.50 gold and at 59 silver that, hey, silver looks like it wants to break 60 and gold wants to break 4,100 and be positioned, right? Like, that's where I think our real-time email service really comes in handy for active people, because you're not going to get that through a newsletter you get once or twice a month, right? If you don't get it 6 days late until 6 days later, you've missed that opportunity. And as you can see, Charlotte, the price action last week was outstanding, right? We saw a lot of stocks that we hold up 15, 20% in one day, in 1 week, right? We had a couple of 7 and 8% days on GDX and GDXJ, which is, hard to find when you look back at those ETFs histories. And this just underscores what we talk about on your program all the time. This sector has a mind of its own. You have to be prepared, and you have to have a game plan. And let me give you an example. So from March 1st until, let's call it Monday of last week, which was August 3rd, pretty rough price action, right? The HUI, which represents the large cap gold miners, similar to GDX, which we talk about all the time, was down about 38%. When you lose 38% of your money by buying and holding a sector that's supposed to do well, meaning gold producers, right, with gold price very elevated, you're scratching your head as an investor and saying, what the heck's going on here? I mean, it's, in our view, it was all predicated by the war and the Fed. We'll get to both of them, but the war is shaping up better in terms of the rhetoric, and the Fed is shaping up better because we've gotten, Kevin Warsh's first meeting out of the way in June. He just did his second one July 29th. So that's positive, right? We're getting to know the rhythm of the new Fed, and that is something that investors are needing to see. But last week was a great price action week, and yesterday was another follow-through day. So I think the bottom's in, and the only thing that could really derail that is a heavy situation on the war, right? Where things double down, Trump doubles down and really lights up Iran. I just don't see that happening before the November elections here in the US.
You're going in exactly the direction I was hoping you would go. I think everybody is wondering right now, is this a true breakout for gold where we leave these summer doldrums behind, or is there some fragility still in there? I know I've seen commentary on the CPI and PPI numbers that are coming up a little bit later this week. So, but for you, it's looking fairly solid at this time.
It's looking solid on two fronts. One is the war. You have to watch the war as an investor. It doesn't matter if you're a US citizen or not. This is impacting our sector greatly. Look at any of your favorite stocks since March 1st when the war began, and you can see it in the chart. I mean, many charts have broken support. I mean, it's not even like they held in. Um, the second thing you have to consider is the Fed, and that July 29th meeting was kind of more of the same from Kevin Warsh. It was like, hey, I'm the new guy on the block. We're going to do things my way. And, CPI, meaning inflation, is our primary objective to get this to 2%. And we're going to do it. Now, how do you raise rates in a scenario where just days later, the ADP number on August 5th was terrible in the US, followed by an even worse non-farm payrolls number August 7th? There is no job growth in the US. It is a farce. If you don't believe me, look at August 1st of last year when GDX and GDXJ broke out simultaneously. It was on the back of a huge non-farm payrolls miss. That's why I think the bottom is in, because what's happening here is you've got two camps, right, Charlotte? You've got the camp that says, yeah, okay, Mr. Warsh, I believe you. We are going to have higher rates. Rates have already gone up. Like, we're not going to have a campaign by Kevin Warsh of raising rates a quarter for the next, 6 months. It's not happening. There's no way they have the ability to do that. And when you have the numbers like we saw on ADP August 5 and then non-farm August 7th backing up your thesis that, hey, rates aren't going up a lot, you feel more confident as an investor, right? And you saw that in the price action on both of those days. Investors were like, hey, this is the bottom. Like, you can't get cute about picking a bottom. You just have to start buying stuff. We ended June 30th on our holdings at 14% cash. And then I plowed in July a lot of cash into the sector. We sold like one stock in July. Like, so, I mean, I was like, hey, this is getting insane right now, right? And that's why we do keep 10 to 15% cash on hand a lot of times. Not, last year. Last year was rock and roll. But when you're basically uncertain, you have to be doing that thing as an investor and say, I'm going to keep a prudent amount of cash on the sidelines. We call that dry powder, where you can then buy stuff cheaper, right?
Of course, of course. And these are some themes that we've definitely talked about in many previous interviews. So always good to go over them. I was going to keep going in the Fed direction. So like you mentioned, we've had these two meetings with Warsh where we've kind of had a getting to know him kind of vibe there. What I'm starting to see right now is people looking forward to the Jackson Hole meeting and wondering, what do we get out of this? So I'm curious what you'll be eyeing at that meeting.
So when you look at our website, fennecconsulting.com, and go to the performance tab, go to look at our 10-year track record in mining. 2016, I was up 149% that year when GDX and GDXJ were up about 73 to 80%, if I remember correctly. The reason we almost doubled those returns was because of the Fed. I did not trust Janet Yellen back then. Janet Yellen and God, who's the other guy's name? Gosh, I can't remember. Her number two, they were both super hawkish people, and I knew they had it in them that they were going to pull the rug on our sector. Fisher, that's who it is. And if you go back and look at history, look at that meeting, Jackson Hole, August of 2016. That was the beginning of the end for our sector. And we were in a malaise for 2.5 years. It wasn't until January of 2019 that Powell at a lunch, like out of nowhere, said, "Hey, yeah, I'm getting more dovish," and he didn't say it directly like that, but his attitude was like, "Hey, we've raised rates enough," and I bring this up to let people know that this is not going to happen at this Jackson Hole. You're not going to have a 2.5-year rate campaign where it just keeps going higher and higher. There's no possible way the Fed could do that. The economy will break. So that's what investors need to take away, is that this time it really is different, the environment here for gold and silver looks great from a backdrop perspective because the Fed only has so many bullets they can shoot. I mean, it's just, you can talk at the mic all you want, But at the end of the day, you can't go on a rate hiking campaign like we saw in 2016 into early 2019.
I think that makes a lot of sense how you put it. And just as we're wrapping up on gold here, usually we talk about those support and resistance levels for the metal. So how are you seeing it right now for gold?
Well, support, as I mentioned, is 3,900 to 4,000. We haven't looked too hard this week because this was such a parabolic move last week as to where our, ceilings are, our resistance levels. But I would say just off the top of my head, 4,400, which, is right around where we're approaching now, as well as 4,700. And of course, the big round number, 5,000, right? That number is in everyone's mind. We pierced through 5,000 pretty easily a few months ago. So people are watching that. And of course, the all time high is around 5,600. So those are kind of your four levels right now.
Okay, always good to get a sense of how you're looking at that. And of course, we want to also ask about updates on gold stocks that you're following right now. Is there anything you'd like to share?
Yeah, sure. So one that got really tarnished here last month was a company called Goldgroup. So Goldgroup merged with Gold Resources, and I've never mentioned this stock before, but it is a pretty big position for us. Meaning, in that merger, we owned a lot of gold resource, and that ticker was GORO, and it became the new ticker as well of the combined company. If you look at their July news, a couple things happened. One was that the leader of the company was replaced by the chairman, Javi Reyes, who's been doing this a long time and has a lot of personal money invested in both companies. So I think that was a win for shareholders to have someone with a lot of skin in the game now leading the company going forward, right? But the other thing that happened was the Russell indexes, which we've talked about on the show before. Anytime you have an index change, you have to be aware of this as an investor, and they did something kind of odd. They basically bought into the stock, let's call it May, June, knowing that this merger was going to happen. Like, this was announced months ago. And then they came to the company in July and said, "Hey, we have to get out because there's certain things about the merger that don't allow us to hold the stock." It was not like they didn't like the merger; it was like they couldn't hold the stock, right? So they started to dump the stock like at any price, and it happened over a number of days. Like, you don't dump a whole position like that in one day. So it happened in maybe 3 or 4 sessions, and then the short sellers started to grab onto the selling, which they always do, and they drove the stock down like exponentially. It's still very cheap here at $2.40, around $2.40 a share. I mean, we think this is easily going to go back to $3.50 to $4 pretty quickly. I mean, like, so we're buying that here. We bought that the last 2 weeks in a row. And then another one would be Xtra-Gold, XTGRF in the States and XTG in Canada. I talked to James at my conference 2 months ago, and James has a real game plan for that gold play. They're already producing revenue. They're the seventh or eighth largest producer in Ghana, which is a part of Africa. But when you look at who else is playing in Ghana, it's Newmont, it's the big boys, right? Like, they're the smallest by far. So I think there's a chance they get taken out because, at some point, if you've been doing this 23 years as James and his team have, you're like, okay, I'm going to prove this out, and then I'm going to sell it at much higher gold prices, right? Like, meaning not at 4,300, but at 5,000 plus. And so we like that stock because it's come off a lot of its from its 2006 26 peak. And Don Durrett and I interviewed them a few months ago, and they have like 4 or 5 other deposits, if you will, right around the main deposit. So, like, they have plenty of drilling that they could do. And interestingly, they have, I think, about 50% of the float held in 3 or 4, hands, including James, the CEO. So very tight share structure, which we always look for.
Well, great. Thank you so much for going over those ones. And we want to take a look at silver as well. So also similar to gold, some upward momentum for silver last week. And I'll ask you the same question that I asked for gold, which is where you see support and resistance right now for silver.
Yeah, so it held 54 to 55. That's major support now, which is above the big support level of 50, right? That's the big number that everyone had their eyes on. And I'll admit, I thought it could touch 50 because silver has a mind of its own, right? Like, I've been in silver for 26 years. I worked on the silver team. I know silver very, very well. I've invested a lot of my money in silver. It's my largest holding at 10.5% as of June. So I have a lot of skin in the game with silver. However, if you look at my commentary with you and others, I was saying, hey, look, you got to watch 50 here. I wasn't talking my book on silver because you can't. Like, as soon as you think one thing about silver, the opposite happens. So I'm very happy to see it make a higher low at 54 to 55. That's really bullish. You saw, it had some trouble with 60 and now cracked through 60 very easily. So that's really bullish. So I think we get back into that 70 to 85 channel here, later this year, which is going to be, again, very bullish for silver producers that are producing at $20 to $24 an ounce, right? Like $70 silver even is outstanding. And when you talk to silver producing companies or ones that are going to produce, they say that same thing at every conference. They're like, hey, John, we can produce at 4 times what our cost is. Like, so it's like we're going to be making huge free cash flow. And you can see that in some of the silver miners already. So yeah, I'm very bullish on silver as long as gold holds up. Gold and silver are connected.
Yes, yes, of course. And I'll throw in my fun question that I've been asking people about silver. I have a feeling the answer is no, but just because we're talking about the unpredictable nature, do you think we can get back to that triple digit level for silver this year? How are you seeing it?
I don't necessarily think 100 plus is in the cards this year, but I do think it is in the first quarter of next year. And I don't know if we'll see 121, the high, but again, we don't need to for these silver equities to crank. So I'm more of a silver equity guy, and maybe I can give you just like one name there that I just talked to yesterday.
Yeah,
Yeah.
go for it.
So
I think that makes sense.
okay. Excellon Resources, EXNRF in the States and EXN in Canada. I just talked to Sean on a 40-minute call yesterday, kind of going through what his game plan was. And these guys, they do have a game plan leading up into next year. They're slowly producing silver now. They just produced their first here in July. That's been press released. But what the market's missing is that they're going to 400, TPD here. I'd say, in a matter of a few months. Like, they're going to show progress, which isn't being reflected in the stock. So you always look for value in a stock based on the chart, based on news. You can combine fundamental and technical analysis. That's what we do. But we start with the chart first. So the chart has been holding 19 to 20 cents US, and it's been capped out at 50. 50, it hit twice and failed. But now your stock is at 25, 26 cents at this recording. So you're 100% away from 50, right? Like, I mean, there's a lot of upside. I think the stock goes back to 50 by next year very easily, because it's already touched there twice on heavy volume, and it wants to break through there eventually when silver gets back, into favor. But Peru as a jurisdiction is improving. There's a more conservative party that just won elections there. That's going to be bullish for Peruvian miners.
Yeah, I have heard about the changing times in Peru, so sounds like that one's one to keep an eye on as well. I want to shift over now to critical minerals. I think we've done in previous interviews a good job of keeping an eye on what's going on there. And the sector just seems to keep getting more and more important. I think this past week we saw the Trump administration announce over $2 billion in funding for various critical minerals projects. So I want to
Yeah.
get your take on the broader landscape there. It seems like it's really thriving as we get this government support. Not everybody likes to see the government coming in and having its hands over things like this. How do you feel? How are you looking at that aspect of the sector?
I get that. I understand why people would feel that, but you have to understand if you talk to CEOs as much as I do and understand the plight of a junior mining CEO, it is not an easy job. You are constantly worried about raising money and managing costs. So when someone waves a 5 or 10 or $15 million check or more in your face, and it's like, hey, free money, like just follow these kind of like rules. Why not? Like, it's not dilutive. You're gonna get a bump in your stock because people are like, hey, these guys are going to raise capital now for another 12 months, right? Because yeah, 5-10 million bucks to a small company is very meaningful. So yeah, there's three that I'll mention in the nickel, copper, and PGM area, and then I'll mention a few others. because these are considered critical as well. So the first one would be Stillwater. We were just talking off camera about Montana, and they are in Montana. Another great U.S. story. That one is PGEZF in the States and PGE in Canada. I've had a couple of clients do due diligence trips out there where they, tour the site via helicopter or whatever. I mean, these guys have a massive deposit, and it's connected to a major called Sibanye, which is SBSW. And the geologists that they have are really, really good at Stillwater. And the thing that makes them dangerous right now is that they're cashed up. They have a history of hitting on drill targets, and they're drilling right now. So like when you have that in a hot market or a market that's improving over the last week and a half, really, really good. I mean, the stock's clearly bottomed here, and it seems to be moving rapidly higher. So we own a decent position in Stillwater. The next one I just interviewed a couple of days ago, which was Power Metallic. Terry Lynch, I think you know him, Charlotte. That one is PNPNF in the States and PNPN in Canada. Terry's just, I wish more mining CEOs were like Terry. He's just going nonstop. I was interviewing him in an Air Canada lounge, and there was all this construction going on. I mean, the guy's working constantly to help shareholders get a better understanding of what they're doing. And what they're doing is they're drilling out two huge deposits in Canada, in a great part of Canada, Quebec, and they've got catalysts coming up. They've put out a press release on their MRE, their mineral reserve estimate. It was delayed, so July 31st was the target date. Stock got hit because they didn't do it. It's not their fault. It's the engineer's fault, right? They couldn't get it done. Like there's a shortage of people in the field right now because prices are so high. So they said, hey, we're going to have this done by August 31st. And Terry reiterated that on our interview. So again, here we are, 3 weeks away from that date. It's probably going to be sooner. When you have catalysts like this, you have to buy these stocks in advance because I'm telling you, their copper hits are outstanding. They've put out some 12% copper, 14% copper hits. I mean, anytime you're like at 2 or 3, you're like, oh, wow, that's pretty good. So we own that stock and we continue to buy it. We just bought it again today. And the last one is one that people don't know probably. I don't think I've mentioned this before, maybe just once. Eastport Critical Metals. And that one is EVIIF in the States and EVI in Canada. The chairman has put 5.5 years of blood, sweat, and tears into this. And again, that's what I'm talking about. Like people don't know how long it takes to start a company in this space. And then you're faced with the challenges of like the market, like we saw March 1st to now. All this said, they made a new uranium discovery in May. That's close to a company, I believe is called Lotus Resources, which has a very successful project in Africa where they are. And then you look at the other aspects of the company. I mean, their copper project could be a monster. Like they are, drilling a copper project right now with copper at all-time highs. There's a lot of upside potential there based on the news I'm seeing. And then lastly, they have a rare earth deposit, which, you and I talked about a lot last year with rare earth stocks just going up hundreds of percent per month. Some of them, it was insane until, that China high five in November where Trump pulled the rug on that rally. But I mean, again, like saying we're going to be okay with China is a joke to me. Like that's not happening anytime soon under a Trump administration. You can talk rhetoric. I'll just buy dips because I know better. I've followed China for 2 decades. They are not our buddy right now in terms of critical minerals whatsoever. So I really like Eastport Critical. It's super cheap here. Some huge seller came into the market on their copper news like 2-3 days ago and drove the stock down 18% in one day. And those are the kind of crazy things that happen in the summer, right, Charlotte? I mean, you see these things and you're like, this is a gift. So we like that one as well.
Well, thank you for sharing those ones as well. And I wonder if you can talk about, so with critical minerals, we can tell just from the companies you've mentioned there, it's a pretty broad spectrum of metals that fall into that category. And I know you are looking more for companies with catalysts ahead versus the commodity itself. But I wonder if you can talk about what could be the next critical mineral that takes the spotlight. Is there anything that you are watching on that note?
Well, one that is now kind of front and center, and it's taken a couple of years for people to latch onto it, is, of course, the tungsten story. I'm contributing to a white paper written by the U.S. government here on tungsten. It should be out within a couple of weeks. And I'm sure we'll talk about that in our next interview at Beaver Creek. But I'm very, blessed to be asked for my opinion on things like this. I'd love to help my country defend itself better. We need more critical minerals in the U.S. and we need better ways to permit and get through this red tape. It's ridiculous. So that's where I'm putting my money, Charlotte. I'm investing a lot of money in tungsten. As of June 30th, I have 17.8% of my portfolio in tungsten equities. So I am definitely overweight the subsector right now. Two names for you there. Western Star, we talked about on your last show. We talked about how companies need money. They did a financing. The financing went well, but the stock ran up too fast. So then everyone took profits. And you can see this in the chart. June 24th, the stock just got creamed. And then it just was down there for like a month. I mean, this sector is unbelievable. If that were technology, that would be like a 2 or 3 day bounce up. I mean, it's in mining. You could be in the doghouse for a month. So that ticker is WSRIF in the States and WSR in Canada. They have not one, but 3 U.S. tungsten projects. 2 are in Nevada, 1 in New Mexico. They're getting their drill permits for New Mexico as we speak. So I think that happens by next month. And Nevada, I mean, Blake's been in the state for 6 years. So he's got good relationships there. And the stock is still uber cheap here at 29 cents US. I don't know. It got to, I think, 65 cents US this year. So, I mean, again, like the upside potential, when you're assessing companies, Charlotte, you have to assess the downside risk and the upside risk. It's not one or the other, it's both. So downside risk is that it hit 19 cents, on decent volume recently. So 19 to 20, let's say, is kind of your low on the stock. And the upside 65. Did a lot of volume up there too. So good risk reward, The other one is Rackla Metals. That one is RAK in Canada. This is a new name I haven't mentioned on any show yet. I just talked to Simon Ridgway for the first time about a week ago. And he's got a plan there. They're very close in proximity to Fireweed, which is FWEDF in the States. Fireweed is a large Canadian tungsten deposit. And these guys, if you look at an aerial map, are really close. The stock looks very cheap here, Rackla. I've encouraged Simon to, as a U.S. citizen, I said, hey, you want to get in front of U.S. investors more, get an upgraded U.S. listing. And that's what he's doing right now. So he took my advice and applied for that. I said, hey, you need more U.S. investors come to my conference. He did that. So I like seeing, CEOs that are willing to Simon's been doing this 30 years. He's still willing to change and learn. And that's important, right? You have to be flexible in this market. You can't just be like, hey, I'm going to put every dollar into the ground. That's not getting it done. Look at the summer action we've seen. All these guys that are drill and no marketing, they're getting crushed just like everything else. So it's got to be a combination of how do you get in front of investors, and then how do you put money into the ground as well. The last one I'll mention is Tellurium. You and I talked about first Tellurium, the stock that I have a decent position in. That one is FSTTF in the States and FTEL, FTEL in Canada. I mentioned this because investors are owed an update. The company said throughout the summer they were going to compete in something called the DARPA Challenge, DARPA, and they didn't get into the challenge. I don't know why they didn't get in, but it wasn't anything material based on their technology. And instead of lamenting about it, the company did something about it. And they basically put out a press release in the last week of July saying, hey, when you look at specialized helicopters, when you look at commercial drones, these things can only carry like 1-to-1 payloads, meaning, they're not going to carry massive amounts of weight. So what First Tellurium did is they took their Tellurium-based technology, which is their subdivision is called Pyro Delta. They own 83% of Pyro Delta. And they went and demonstrated that they can carry over 3-to-1. I don't know who won that challenge. I think it's just ending. It just ended, I think, on Friday or Saturday. But I guarantee you there's not a lot of companies pulling 2-to-1 or 3-to-1 because I know the drone market pretty well. It's a very lucrative market. So I think there's the potential revenue for that company is very, very strong. And the stock just had a huge seller today. In fact, I called the CEO to see if I missed something, and he's like, "No, there's just a big seller out there, and stock's down 9%." Again, like another summer blessing, with someone just blowing out stock and doesn't even understand how to read a press release. So, I think there's tremendous opportunities in some of these critical mineral stocks, as you know, Charlotte. And that's why I run conferences that include these guys, right? Because Beaver Creek is my favorite U.S. conference. I think Misha and Jessica do a fantastic job, but they don't do tungsten, tellurium, antimony. They don't allow those companies to present. And so that's when I started this 3 years ago. I'm like, hey, we need to include these type of companies, because I could see then in talking to the U.S. government, being from Washington, D.C., I saw that the U.S. government was starting to warm up in conversations back then. It wasn't super warm, but it got real warm with Trump's, executive order last March. So
Well, great context there, and we'll look forward to the tungsten white paper. I think we can wrap it up for today, unless you had any very final thoughts that you would want to leave investors with.
my only thought is hang in there. If you're not working with me, work with someone that will motivate you to stay invested, right? Like, this is not the time to bail. You don't bail when you're down 40 to 60% in names that there's no negative news on. This is just a really bad situation, that happened since March 1st. Did you as an investor have anything to do with US Iran? No, neither did I. Like, you have to play the hand you're dealt, though. And the hand you're dealt right now is a temporary problem. That's what I want to leave your investors with. This is going to pass, and you have to be positioned correctly.
Very nice note to finish up on. Thank you so much for coming on to talk. This was great as always.
Thanks a lot, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.